What's going on, guys? We're going to cover some setups from today's price action. Today is July the 21st. Now, there's a few things on my chart that I want you guys to get familiar with. The first one is this purple magenta line here. This is the 20 SMA. Okay, we're looking at the 5-minute time frame. So by looking at this 5-minute time frame, we are going to get some clear indicators where we should be going long and short. So off the open, if you kind of just zoom, if I zoom over here to the left, you're going to see a white line here, a white line here, and a white line here. This is my linear regression, channel 50. Basically, it's taking 50 channels, it's giving me a mean, and it's giving me a 0.5 standard deviation off of that. Now, if you look at the pre-market and you look at overnight London, you can see we had this, recent relative swing high. And this happened about 3:10 a.m. Pacific Standard Time. We kind of pulled back leading into the New York session. Okay, so you can see this pullback into the New York session. And then in pre-market, right off of the open, we had a 20 SMA setup. Now, that is when you have price action that is previously being traded below the 20 SMA, and price action starts to rotate back over the 20 SMA. Okay, so in this particular situation, if you're looking at this trade right off the open, it can be a little bit scary because a lot of times, most of us feel that you're chasing the move. If you get into the trade, it's not going to work and it's going to go against you. So you're almost waiting for more validation, more clarification, or you're actually looking to go the opposite way on a trade like this because you don't want to risk this much points off the open. It's too volatile. But in this particular case, the following candle confirms the high. Now remember, on the 20 SMA trade, we're looking for price action to close above or below the 20 SMA when it was previously trading the other side. And then you are waiting for a following candle. And when that following candle is live, meaning when it is printing, and it takes out the high or the low, depending on if the setup is long or short, that's when you want to enter the candle. So in this particular trade from today's example, we would want to be entering into the trade in the active printing 6:35 a.m. Pacific Standard Time candle long. Now there's a couple of things that you can do for a take profit. One, if you're looking for a very quick scalp, I would recommend 5 to 10 points. Two, you could always use levels of prior supply or demand, or levels on your chart, which in this case you could have used the linear regression that was sitting at 23,316. So from entry point of around 23,300 to 316, you're looking at about 15-16 points. Now again, your stop loss in a scenario like this could be one of two things. It can be a current ATR or half of an ATR, so average true range. It can be half of your reason why candle, which the candle that closed over the 20 SMA is your reason why, or it can be the entirety. It all depends on you as a trader, how many contracts you're willing to risk on any one particular trade. Now, you can definitely try to target a lot more points. You can go for a full 1-to-1, look for 40 points, look for 30 points, 20 points. Just keep in mind, the more points that you look for, even though you will get instances where price action does run, you're going to have other instances where it gives you, 10, 12 points, let's call it, and then pulls back, right? So again, we never know the potential outcome of any one trade. We just have to find a system that works in line with our trading emotions, and then we need to follow it from there. The next setup that was put into motion was here at 8:15 in the morning. Now the market got a little bit choppy here for a while, started to really consolidate going into the New York lunch and coming out of lunch before finally we had this nice, kind of washout here back to double bottom test this low from 920. Now this short here, although it does close below the 20 SMA, the price here was 23,397, and the following candle went down to 23,383. Okay, so from a price of 23,383.25 to the following candle 23,385.25, there's no real confirmation here, meaning price action never really breaks through the low of the reason why. It tests it, and it does a damn good job at testing patience and discipline because it tests it to an exact T. Now, if you have a little bit of a happy trigger finger, I could see how someone would get into this trade and maybe you had to sit through some drawdown before it finally started to work in your favor. Or you're going to have to leave this trade alone. Like, allow it to break the previous reason why candle, by a point or a point and a half, and then jump into the trade. Now, how long do we wait for these setups? I normally like to wait between 1 and 3 5-minute candles. So assuming there's a potential setup, I will give it as long as 15 minutes to see if it's going to confirm. Now, right here is a sticky situation. This would be technically a loss depending on if you're looking for a quick scalp, but let's just speak facts, right? Because not every trade's going to work. This trade right here was a 10-point range reason why candle to the long side. The high price was 23,400 and it goes up to a price of 23,404. So even if you were looking for a very small take profit, like a 4-point take profit or a 5-point take profit, it would not have hit and you actually would have taken a 10-point loss on this trade. So this long right here was a 10-point loss. Okay, now it does immediately set up a short position here with a very, very tight stop. The stop on this reason why candle is 7.5 points. Now, if you're looking for a 1-to-1, you definitely would have got that hit. If you're looking for a little bit more than that, maybe you're looking for 1 ATR. At this point in time, it was 15 points. It also would have been hit. The next trade setup was a long at 940. That does confirm the risk on this candle was 14.5 points. So make sure you're adjusting those number of contracts to be able to be in the trade and allow it to breathe a little bit. But let's call it 15 points. If you're looking for half of that, you would be looking for a 7-point scalp. If you're looking for a generic take profit, between 5 and 10, anything in between. If you're looking for a full 1-to-1, you're looking for at least 15 points. The next setup that happens to set up was here, but there was no confirmation. There was a long, there was no confirmation. And then finally, we got this short at 11:25 Pacific Standard Time. The range on this reason why candle, which means your technical stop loss, was 6.5 points. So let's call it 7 points. And then that would have been hit as well. So there was a loser in here. There was a couple of false moves where there was no confirmation. So those are just no trades. And then you had a nice winner here. And the nice winner off the open. So all in all, about 5 trade setups today. One of them was a loser, the other ones were winners. So all in all, if you were trading, you should have been able to be on the profitable side of things if you were following strictly this strategy and kind of playing in between this range here of the linear regression channel here all the way up to the high of day, which was here at 23,424, and then all the way up to the linear regression channel. So again, if you guys want to trade this strategy, maybe you want to try it out. Apex is 80% off. I definitely recommend grabbing some evaluations and tracking those trade setups. You can use my discount code DAnthony. Also, if you guys want to join Evolution Traders, I offer a course, I offer a live community. There's a lot of good information and educational content that is not on YouTube, that is in the Discord community. So that link is also tagged down below in the description. I will see everyone else on the next video, guys. Make sure to give this video a thumbs up and I'll catch you guys all next time.